What is going on, you guys? Lincoln here. Welcome to the video. This week, as promised in the last video, we're going to be talking about writing covered calls. I'm not going to go into kind of the beginner or the basics or anything like that. I'm assuming you guys already have kind of foundational knowledge. If you guys do want that information, you can check out my website, networthwell.com. I have an article down here on how to write covered calls. I have another one on how to roll covered calls. So if you are going to write covered calls, then you're going to want to check out this one on how to roll them as well. But this one kind of goes into the basics of writing covered calls and a lot of background information. This is actually a pretty good article, so I'll link this down in the description, and you guys can check that out. I do have one video already made on how to sell covered calls. This video kind of highlighted you can basically sell covered calls on any stock at any price point you want, so there's no reason not to. And it's good content, but it's not exactly everything I wanted to say on the topic. So this video today is going to jump into more my mentality, what I'm doing when I'm selling these covered calls and writing covered calls, that sort of thing. So that is what this video is going to be about. Before I do that, jump into a quick portfolio update because people seem to enjoy those. Also, thank you for the subscribers. I can't believe I have 598 subscribers, so I appreciate all your guys' support and that sort of thing. I'm seeing a lot of positive feedback, and a lot of people are saying the stuff's helpful, so I'm very glad to see that, and that makes it totally worth it to put in the time and effort for these videos, so I appreciate that. All right, let's jump into the portfolio update. Nothing's changed since last week, really. Apple still. I'm trying to load up on that position a little bit more. Yeah, nothing else has changed, really. Sold a couple more options, but nothing's new from that perspective. If you guys missed it, Dropbox did have an announcement yesterday. Today is Thursday, June 3rd, when I'm recording this video. So on Wednesday, there was a article released that Elliott Management took a big stake in Dropbox, which is kind of, I mentioned it before that I thought an institutional buyer was scooping up some shares after their last earnings release. And it turns out it is Elliott Management. So they're a pretty big activist hedge fund. So I'm not entirely sure what their play is going to be into Dropbox, if they just think it's undervalued or if they're going to try and steer management one way or the other. This is kind of outside their typical realm. So yeah, I'm going to keep my eye on that and see where it goes from there. But it did give the stock a nice pop yesterday. Other than that, 3D Systems also rolling still for the last month or so. Same thing, I feel like there's an institution there buying shares. And given the market cap on these companies, they're pretty small, especially 3D Systems. When you do get an institutional buyer in there, it pushes these prices up pretty big. So other than that, nothing too crazy going on in the portfolio. So now let's jump into the covered calls selling portion, writing covered calls strategy, and kind of my thoughts and process, what I'm doing when I'm writing covered calls. So this is going to kind of go in the same format as the last video, so I hope you guys like that. If not, you're stuck with it again anyway. So step one, or kind of my step one, is to be writing covered calls on stocks you already own. So there's no reason to go out and buy a certain company, whether it's Riot or companies with very high implied volatility that makes writing options seem very attractive. You're going to end up bag holding these stocks, okay? So it's not worth it to try and chase those premiums. That's what I'm trying to say. So do it on companies that you already own 100 shares of, or you're already long calls. So for me, I am long the deep in the money leaps on 3D Systems and Dropbox, and that is what I'm selling covered calls on. So that is step one. They're companies that I like, and if you guys see this, I'm significantly down on, let me see if I can get rid of this. So if I highlight all of the premium that I've collected just from selling covered calls this year, I'm down $419, and that's because of this single 3D Systems call that I sold. And I'm going to explain why this was such a bad sell, and why in this video I'm going to tell you not to do what I did here, even though I'm still kind of doing what led to this big loss. So At the time that I sold this, I want to say 3D Systems was about $19.50 a share or something like that. You can see I sold it on the 12th for an expiration date about 3 weeks out, and ended up taking a pretty hefty loss. So even though I sold this $20 strike, I didn't want to actually let 3D Systems go for $20 per share. So that is step number 2. If you're going to be selling covered calls, you need to be ready to let those shares get called away for that price, which is something I wasn't ready to do here. I'm super bullish on 3D Systems. I think there's a ton of upside, and you can see even right now it's trading for a little over $30 a share. So that's why I ended up having to eat this huge loss. I could have let this call just get exercised on me, and then I would have had to exercise my leaps to cover this position, but I wanted to keep my long exposure. So I ended up having to dish out $1,000 to buy this contract back. So please, even though I did this incorrectly, maybe I'm dumb and I'm just a slow learner or something like that, but pick strikes that you're happy to let these stocks go for. So at this time, I should have just picked a $35 strike and sold it for 3 months out or something like that, and just collected a modest amount of premium. Probably would have collected about the same amount of premium. Anyway, that's the right way to sell. So yeah, always be selecting strike prices that you'd be happy to let it go for, okay? And my step 3, this one, you got to kind of balance it with what I just said. So preferably you're selling these 1 to 3 weeks out. If you guys don't know, kind of the accelerating nature of time decay, when you write a covered call and the expiration date's for 3 weeks out, it's kind of in this range. So there's very fast time decay as the expiration date comes closer and closer. So that's the accelerating nature of time decay. Whereas if I would have sold a 3-month out covered call on 3D Systems, the first basically 2 months of that are very, very, very slow time decay. Okay, so I wouldn't have seen a lot of depreciation in that contract that I sold. So this is kind of why I got caught up in selling a closer to the money strike than I should have. I was basically trying to chase this fast time decay. Obviously, if it wasn't for this one contract, selling these 1 to 3 week out strikes would have been doing very well for me. You can see about $300 collected on the year, which is actually a pretty good return. But all it takes is this one contract to screw me and turn this into a negative $419 year so far. So just be careful with those. You are kind of playing with fire if you're not picking those strikes that you're happy to let it go for. And that's especially with step number 4. So you got to be careful with the high flyers. 3D Systems, Dropbox, they're both pretty low market cap companies. For me, I'm very bullish on them. I think they have a lot of upside potential. So the likelihood of them increasing from $18.50 a share to it was probably $28.50 a share when I bought this back. There's actually a decent probability of that, even though that's like a 40% gain in a few weeks. Whereas if you were selling covered calls on Apple or even Ford or General Motors or an index fund, something like that, they're going to move much slower. So if you're selling covered calls on Apple and you're selling 10% out of the money, Apple's a $2 trillion company. So think of how many more iPhones or MacBooks and everything else that they need to sell to increase their market cap 10%. Whereas 3D Systems, they're making a few $100 million in revenue a year. So it's still a lot of money, but it is just the difference in 3D Systems doubling and Apple doubling. Like, you can't even compare those two events happening. So writing covered calls is a much better strategy, much more predictable. It's going to be much easier to write calls that are going to expire out of the money if you are writing them on slower growers and bigger companies with large market caps. So even companies like AMD or Micron or something like that, you're going to be much better off with those bigger market cap companies. It's going to be a lot lower likelihood of something like this happening to you. So that is step number 4. I realize as I go over these that I pretty much ignored these 3 steps when I sold this call and most of these other ones too. So despite what I'm doing, do as I say, not as I do. Okay. So I'm actually, as I talk right now, I'm kind of convincing myself, like, I just need to get back to the basics, sell these. The premiums might not be as high, but it's going to be a much surer way for contracts to expire worthless. So, yeah, if you guys pay attention to the sheet at all, which is linked on my website right here, it's the exact same sheet. So if you guys pay attention to this sheet at all, you'll probably start seeing me sell calls that are a little bit further out of the money, listening to my own advice. So maybe I'll start selling a month out or 2 months out or 3 months out, following my own advice. And if I would have done that from the beginning, I guarantee my return would be a lot better than negative 145% for covered calls on the year. So that is a wrap on the video. I hope you guys found the information useful. Please hit the like button if you did. Comment down below if you have any questions. Like I said, I really appreciate all the support I'm seeing from you guys. It's really crazy and incredible, so I appreciate all that. Next week, I'm guessing I'm going to be making a video on my version of the poor man's covered call, which is just combining these deep in the money leaps and then selling covered calls on these long positions. So that is the plan. I'll catch you guys in that video. Thanks for watching.